Welcome to FIRE's educational video series. The objective of this video is to talk about what is polarity principle and what are the implications when there is a change in polarity principle. Up until now, we have talked about various aspects relating to support and resistance. We have spoken about the basics of support and resistance, how to identify them on live charts, their three forms, the timeframes on which they can be identified, and the various ways and tools of identifying them. When a support or resistance level is approached, one of two things can happen. One is that the support or resistance holds and the price reverses in the other direction due to a shift in the balance of power. The other is that the support or resistance breaks and the price continues moving in the prevailing direction. In the previous video, we talked about what happens when supports and resistances end up holding. Now, let us focus on what happens when supports and resistances end up breaking. As we said in our previous videos, at a support level, you can expect demand to be strong enough to absorb all the available supply, causing the price decline to temporarily halt and for the price to reverse higher. Similarly, at a resistance level, you can expect supply to be strong enough to absorb all the available demand, causing the price advance to temporarily halt and for the price to reverse lower. An important thing that one needs to keep in mind is that supports and resistances do not hold forever. They do break from time to time. And when supports and resistances break, they often tend to reverse their roles. This concept is called the polarity principle. Let us talk more about this now. The concept of polarity principle states that when a support or resistance breaks, it tends to switch its role. In other words, when a support level or a support zone is broken, that broken support level or zone becomes a resistance in future. Similarly, when a resistance level or a resistance zone is broken, that broken resistance level or zone becomes a support in future. Let us understand this concept using a few hypothetical charts. Notice in the chart that after holding on 3 occasions, the support eventually broke the 4th time that it was tested. Later, observe that this broken support became a resistance on the way up. See that the price reversed lower from the vicinity of the prior support. Observe here how the support switched its role into a resistance. Notice that after holding on 2 occasions, the resistance eventually broke the 3rd time it was touched. Later, observe how this broken resistance became a support on the way down. See that the price reversed higher from the vicinity of the former resistance. Observe here how the resistance switched its role into a support. Notice in this chart how a broken resistance turned into a support during a future price decline. Similarly, also observe how a broken support turned into a resistance during a future price advance. You may wonder, why does the polarity principle work? Well, the reason why the polarity principle works is because of the psychology of market participants, which is repetitive in nature. Let us understand this using a chart wherein a resistance level marked as point X was successfully broken the third time that it was tested. at the resistance level of point X, sellers will be aggressive in defending this area. However, as the price successfully moved above point X, short sellers would now be caught on the wrong side of the trade. As such, they will use the subsequent price decline towards this broken resistance level, marked as point Z, to exit from their short positions. This short unwinding will cause the price to take support at the broken resistance level and move higher from the newly found support. Another reason as to why the polarity principle works is that as the price broke above the resistance at point X and moved higher, those who missed the boat to buy will regret this foregone opportunity. Hence, if at all the price reapproaches this broken resistance, buyers who missed the initial buy opportunity will now be more than happy to buy the security at or near point Z. This increased buying causes the price to take support at point Z, which is near the vicinity of the former resistance, and move higher from point Z. The third reason is that following the resistance breakout at point X, there will be market participants who sold the security at higher levels, such as at or near point Y. As the price declines and approaches the former broken resistance level, these market participants would be eager to book profits and exit from their short positions. This short unwinding will also cause the price to take support near the former resistance level and move higher. Finally, those who bought the security at lower levels, such as at or near point W, but ended up exiting their long positions in anticipation that the resistance near point X would hold, would now regret the opportunity of exiting their long positions early if the price breaks above the resistance and marches higher. These market participants could use any subsequent pullback towards the former resistance to buy the security. This fresh buying also causes the price to take support at the former resistance level and move higher. In a nutshell, a broken resistance can turn into a future support for the following reasons. Short unwinding by sellers who sold at resistance and were then caught on the wrong side of the trade as the price marched above the resistance. They tend to use the subsequent retest of the broken resistance to close out their short positions. Those who did not buy at or near the resistance level. If the price marches past the resistance, these people would regret the buying opportunity they missed. Consequently, they could use the subsequent retest of the broken resistance to initiate new long positions. Those who sold at higher levels and are making gains on their short positions. As the price approaches the broken resistance, they could use this opportunity to exit their profitable shorts. Finally, those who exited their profitable long positions at or near the resistance will regret closing out their positions prematurely if price marches past the resistance. They could then use the subsequent retest of the broken resistance to initiate fresh longs. Using the same logic, but in reverse manner, a broken support can turn into a future resistance for the following reasons. Long unwinding by buyers who bought at support but were then caught on the wrong side of the trade. They could use the subsequent retest of the broken support to close out their long positions. Those who did not establish short positions at or near the support level. If the price moves below the support, these people will regret the opportunity that they missed to short the security. Consequently, they could use the subsequent retest of the broken support to initiate fresh shorts. Those who bought at lower levels and are making gains on their long positions. As the price approaches the broken support, they could use this opportunity to exit their profitable long positions. Finally, Those who exited their profitable short positions at or near the support will regret closing their positions prematurely in case price falls below the support. They could then use the subsequent retest of the broken support to initiate fresh short positions. This is the daily time frame chart of USD INR. Notice how a former resistance acted as a strong support in future on multiple occasions. This is the weekly chart of Biocon. Notice how a former resistance switched its role into a support going forward in time. This is the hourly chart of Reliance Industries. Notice how a former resistance eventually acted as a support in future. At the fag end of the chart, notice that this resistance turned support level was broken, which triggered a sharp fall in the price of the security. This is the 5-minute chart of gold. Notice how a former support eventually acted as a resistance in future and prevented the price from rising further. Well, that was all that we wanted to talk about in this video. If you liked our video, do not forget to click on the like button below. Also, hit the subscribe button to subscribe to our YouTube channel and the bell icon to receive regular updates from our site. Last but not the least, we have a dedicated space for School of Stocks related discussions on FIRE's community. We encourage you to interact with us on our School of Stocks community page by visiting the link shared below. Thank you for watching this video.